Hello and welcome back to the podcast. I'm so excited to be here chatting with you. It's been a hot minute, and I still don't have my whole blueprint exactly, how I'm organizing the podcast. I am going to change the podcast name again because it just doesn't quite fit right. I have had a bit more clarity on what I'm wanting to do moving forward with this new kind of expanded brand and all the things. But for today, we're going to talk about one of the topics I've been wanting to talk about. It's not related to any of the other podcast episodes specifically, but it's something I'm excited about and want to share with you. And we're trying a little bit different setup here today. We are hanging out in the kitchen, so the lighting's a little bit different, and the little dude is hanging out next to me in they call it a toddler tower, but it's like a kind of contained stool thing that allows him to stand or sit and play and all the things. So it's probably going to be a little bit noisier than usual. I apologize in advance. And hopefully it doesn't get too chaotic or anything like that. So anyway, today I want to talk about the profit first method because this year I have finally implemented it after, how many years. So if you've been here on the podcast if you've been a listener of the podcast for a few years, you might remember that we had Juana Lisa from Making Stories probably 3 years ago now. And she was talking about paying yourself and how important it is, and using something like the profit first method to make sure you're paying yourself. And I still hadn't done it. And a big part of that was because of my bank account. My bank account wasn't set up so that I could create different folders and organize stuff really nicely. So it was a matter of like keeping track of it in a spreadsheet, and then it just, didn't really end up happening, even though I set up the spreadsheet. And so I finally decided at the end of last year that this was something that I really wanted to prioritize. I really wanted to find a platform that would let me do this. Actually, it's in part because we changed our personal banking account so that we can do something similar, and it allows us to create different folders for saving for different things and stuff like that. But anyway, if you're curious about platforms, the platform that we're using for personal stuff is called Soooo. And so I can't speak to that specifically from a business perspective, like a business account. But what I'm using for my business account now is Relay. So just like I have a feeling we're going to have a lot of editing in this episode because we keep dropping wooden toys, and they are loud. Anyway, so the bank that I am using for my business account right now is called Relay. So just like Relay Race, Relay Financial. Yeah, and I'm really, really loving it. There's some things that make it a little bit more complicated in terms of like bookkeeping kind of stuff, because every time I move money between accounts, it's recording it in all of my statements and everything. And so then it's a lot more numbers to track. But they do have a cool feature where you can set it up so that every time you make a payment out of that account with your credit card, you can have it, well, your debit card actually, it will send you an email and be like, hey, we saw that you made this payment. Forward us the receipt. And so then it will keep track of your receipts for you too. So, yes, we're already getting a little bit antsy. So the profit first method, the whole point of it is for business owners to prioritize making a profit and paying themselves, because it's so easy as a business owner to prioritize funding the business, paying business expenses, paying for new courses and technology and, you know, platforms and all of the things to run the business, and the paying yourself part, the profit part of your business, those things can kind of be put on the back burner. And I can attest that that was definitely the way I've been running my business. Is, really uh, reinvesting most of my income into the business. So I officially have, a payment for myself this year. I still haven't moved it over into my account, so it's just still my personal account. So it's still just building up in my business account, but it's a separate folder. It's a certain percentage every single month or every single week that is added into my account that is owner's pay is what it's called. So anyway, the whole profit first method, it is a concept developed by Mike Michalowicz or something like that. He has a book on it and all of the things. I have not read the book. I've only listened to like a few different bookkeepers and fellow business owners and folks like that who have taught the concepts of it. Speaking of which, if you are inside Pattern Design Circle, we had a guest speaker, Empowered Profit, who talked all about keeping track of your numbers and staying legal and accounting and all of that stuff. We actually ended up splitting it into 2 calls because we had so much to talk about with. So Empowered Profit inside Pattern Design Circle is an incredible guest replay that you can watch if you're a member. If you're not a member, I can go ahead and put that link in the description for you as well. I'll also link the podcast episode with Lisa in the description. So yeah. So anyway, the whole idea of profit first is that when your money comes into your business, when you are paid for your products or your services, you split that money into different categories for your business so that you don't have it just all sitting there to use for expenses. So you can create whatever accounts you want or whatever folders you want to manage. But I just set mine up with kind of the baseline recommendation. So there is a taxes folder, there's an owner's pay folder, there's an operating expenses folder, there is a profit folder, and then there's just like the general account where all of the money comes in. So you want your money coming in to be in its own accounts to make it super easy to divide it into the other folders. If you have all of your money coming into, say, expenses, then you kind of can end up with the same problem again. And so then you just establish what your percentages are. You can adjust based on, from the baseline recommendation according to whatever your expenses are, where you're at in your business. You can, adjust it over time. But you essentially want to work towards having, less than 50% of your money going towards operating expenses for your business. And so then the really cool thing about Relay, the bank account that I am using, or the bank that I am using for my bank accounts, for my business bank account, is that you can set up auto transfer rules. So you can have it automatically take that money from your revenue, from the money coming into your business, and have it automatically split it according to certain percentages into the different folders, however you want. And you can have it set up as frequently as you want as well. So I have mine set up to allocate money on Sunday every single week. So it's the first day of the week. Well, here in the US, we call it the first day of the week. So I have mine set up to split up my money on Sunday every single week. So I have it set weekly, and then every Sunday morning it automatically transfers my money into my different accounts according to the auto transfer rule that I've set up. So my auto transfer rule is, and you can set up multiple rules. So if it's like you have an account that you are saving up for a certain expense, you can have it putting money into that. I feel like there's a better word, but allocating money into that account, putting money into that account every single week. But then you can have a rule so that once it hits that target number, it maxes out there, and then it's not putting that money in there anymore. So that's really cool, I think. Anyway, so for my profit first system that I have set up, I have 15% of the money coming in is going to taxes, 35% is going to owner's pay, 10% is going to profit, and 40% is going to operating expenses. Again, I think that was the kind of the standard suggestion that I came across. It's possible I tweaked it a little bit, but that's what I've been using. So there's 40% of it is going towards business expenses, 10% is going to profit, 35% is going to owner's pay, and 15% is going to taxes. And so, yeah, I do kind of actually, I'm going to look it up for you. Okay. So I pulled up the numbers that I was using to create this. This is from Matterhorn Business Development. I think they're like a bookkeeping kind of company or something like that. Anyway, so they have recommendations based on how much money you are making in your business. So under $250,000 a year, which I anticipate everybody pretty much that's listening to this podcast is, or most folks at this point in time, based on who my current audience is, you're probably under $250,000 a year. So the recommendation is 5% to profit, 50% to owner's pay, 15% to taxes, and 30% to operating expenses. So I actually have more going to operating expenses than they recommend. So they recommend 30%. I currently have 40% going. I have more going to profit than they recommend. I have 10% instead of 5%. I have less going to owner's pay. So I have 35% instead of 50%. And then taxes, I have the same. So I currently do have it split up a little bit differently. Again, if you want to follow these guidelines, they are recommending 5% profit, 50% owner's pay, 15% tax, and 30% operating expenses. And again, if you like you can't operate your business with 30% operating expenses compared to what you're used to, then you can adjust your percentages to better fit your business. And then just as a general idea, in case you're curious, like as the income increases, it kind of varies, but in general, the profit percentage gets larger, the owner's pay percentage gets smaller, tax stays the same, and operating expenses increase because you have more people that you're paying to work for you and that kind of stuff. So in case you're curious how that changes over time as you increase your business revenue, as the revenue coming in increases, the profit that they recommend you setting aside in general increases, the owner's pay decreases, the tax stays the same, and the operating expense increases because now you're paying for more employees and things like that. So I can give a general idea of how to allocate that money, but it's just, and I know we've talked about this several times on the podcast before. It's one of those things when you're like actually paying yourself, you feel like just feels good. Like it just feels good. Now, I will say going from like having 85% of the revenue for expenses down to, what did I say? I'm using 40% for expenses. It does make things a bit tighter. And so that's been challenging. I have had to pull from profit a few different times. And there was one thing that I really, really, really wanted to buy for myself. And so I pulled it out of my owner's pay, and then I repaid it back out of expenses. So that that definitely has been challenging, of course, as you might anticipate. But it is fun and exciting to see that owner's pay folder in there. It feels good just to know that I'm kind of managing my money a bit better, and it motivates me to make more money. And that's something that I've um, shared, I feel like, transparently in the past, that because my family does not need my income, we do fine on my partner's income, and um, it's like so my business income is not necessary for my family, and that is, a huge privilege. And at the same time, it doesn't give me that much motivation to make money. Like, I do this business because I want to help people, because I really care and I'm passionate and I love doing stuff. Um, but then there's not that incentive. It's not like I have this big vision for what I'm going to use my money for. Um, and I do know 100% that I have some, money issues because of that. And so if you resonate with that, then I do definitely recommend setting up profit first. But if you don't resonate with that, if you're like, I definitely need my income, or I need my income in order to decrease my day job or quit my day job or something like that, then 100% use the profit first method or something similar, so that you are actually getting money. So you're actually getting paid. And you're not seeing that bank account number and feeling like you can actually spend that money on expenses because you need that money. So I think we better wrap up this podcast episode here, because this little guy is struggling. But I hope that this was helpful. I hope that it shared something new and interesting with you, and especially that breakdown in the numbers. I know that that was something that was like kind of confusing to me, as well as like how to actually set up the accounts and transfer the money. Relay 100% makes that so simple. So I'll include a link for that in the description. I will catch you again next time. Bye bye.